Welcome to CFO Chat. This is your platform for every corporate action. All the details are here, and we're delighted to have the CFO of Safaricom, Dilip, with us because Safaricom released their half-year earnings this morning. Delighted to have you on set.
Good afternoon, and thank you very much for having me here.
Great. Let's start from here. I think apart from April 2020, where we saw Safaricom postpone the guidance as far as the earnings outlook is concerned, this is the first time I'm seeing reposturing on the same, downgrading Kenya, upgrading Ethiopia. Could you speak a little bit to the risk profiling in the operating environment?
No, that's a very good question. Let me start with reconfirming what we said when we released our annual results in May. And when we spoke about our guidance, we said two things. We said there is MTR coming through, and at that point in time, we are not very sure what the numbers would be. As you know, we are all waiting for regulator to confirm that, and we were also in the court at that time. So we said that we'll come back when the MTR have more certainty. And the second thing is around the macroeconomic environment. Remember the Ukraine-Russia impact and the macroeconomic impact on the inflation, currency was just setting in. We are still seeing the early days of the impact would be coming in. And we did inform our investors, analysts, and all our stakeholders that we will come back at an appropriate time should this require a revision. And as you rightly mentioned, yes, we kept the group guidance same, but within that there is a downside or downgrade in Kenya, and that's purely coming from the macroeconomic impact that we're seeing in the financials on the top line as well as on the bottom line driven by the cost. So, there are quite a few line items in the cost that we have seen cost increasing disproportionately because of the inflationary pressure that we are seeing. That's the rationale and the logic why you have done. But as I mentioned to you, our EBIT guidance is what overall group guidance remains same, and in fact CapEx guidance unchanged for both Ethiopia and Kenya.
Okay. I'd imagine investors are curious to know, does this revision, especially the downgrade in Kenya, have any impact as far as Safaricom's dividend policy and potential dividend payout is concerned?
As I said, we updated our investors already saying there could be revision based on the macroeconomic changes and the MTR. So basically the regulatory impact and the macroeconomic impact. So as a dividend policy, I think the amount of dividend what we pay is a function of the full year's net income that we earn, and there is an 80% of dividend that we pay at a consolidated level. So it's a function of what investors and analysts are looking at from that guidance, what we have provided in May. But it is fair to say that we did inform our investors that the regulatory and the macroeconomic factors have not been taken into account in the guidance.
Still on the operating environment, your total revenue is up by single digits, I'd say low single digits. The operational costs are up by double digits. Clearly some very squeezed margins here. I think this is the first time I'm seeing Safaricom's EBITDA margin down below 50%. Are you significantly concerned about the cost escalation in this market?
That's a good point. We have been a growth company, and we have to drive that agenda of driving top line growth. Yeah, the cost escalation what we have seen in Safaricom is we are not alone. I think in this journey you will see many other companies also facing similar challenges. Just on fuel, look at what the cost increase in the diesel. Look at the cost increase in the power. So our view is that we need to drive the top line agenda, and at the same time drive productivity in a way that we could keep our costs down. So I'm not worried about what happened just in one half of the year, because I think we are here for long, and we are investing. We are investing in the growth areas. We have and investing in growth areas in a way that enables us to keep our margin intact. And Ethiopia is a case in example. Of course, you will see dilution in the short term. I think one of the areas of top line growth is also expanding our geographical area beyond Kenya. I think that's something that we will keep exploring to look for new revenue opportunities, and cost is something that we are very, very careful about in terms of how we drive productivity. I think H1 has been very tough. I just said we are not the only one who has faced this kind of issues. We are watching out this and putting it a lot more efforts to see that how do we bring in productivity in the rest of the year and also going forward, because customers are looking at more values. So this is probably the only industry where you don't have an opportunity to increase price. I think in your lifetime you have not seen an increase in price from telecom, but others are able to do that. We don't have that power. So customers are always asking for more, but we have to enable to make sure that we are still delivering prices, but at a cost which you can afford, which protects margin. Yeah, because of this year's the pressure coming from the inflationary pressure has not been helpful, but I'm more confident about the future. Things will stabilize as you go along, so I'm hopeful.
I see. There was a mention during the earnings release that, especially as far as voice is concerned, clearly the revenues are tanking. We are now focusing more on protecting our market share. Given what you've said about driving the top line, I'm curious because it looks like we are keen on a reversion to pre-COVID-19 pricing, especially from a data standpoint as well as a mobile money transfer standpoint. But don't you think there will be a trade-off if we go to pre-COVID pricing and then your market share or volumes are likely to be compromised on that?
Voice has been a challenging as a revenue line item. One reason is that globally, that's always, there is always this trade-off happening between voice and the other means of communication through the social media, right? The second part is the values. Our customers are asking for more values, and remember, we are premium to the market, our competition. So we have been also optimizing our price in a way that supports that value proposition. So what it was doing is that although I think we managed to increase the volume of usage by customers. So it's not that it's stagnating in a way that people are using less. People are using less with lower rate, and that has been deliberate from our side. We're reducing premium on the voice side to ensure that customers get more value. So that's on the voice side. But this H1, I think it's got accentuated by the increasing pressure on inflation, as because the consumers are optimizing, and I'm sure they have other priorities before talking about the voice and telecom. So they're prioritizing food and other priority areas. And that's been but otherwise, if you look back, we kind of stagnated, we have flat, and voice is still 27-28% of our revenue. So we can't ignore. When I say that we have to defend voice, there are two elements of it. One is to make sure that the pace of decline is slow. Second is to make sure that we get the customers we want. That's the entry point for everything that we do. Yeah. So it's a very important franchise in the way we manage our portfolio. So voice needs to hold. So therefore, customers are important. Therefore, customer share is important. What they're using, the traffic, what we call the traffic share, that's important, and that's also it's an important KPI that we monitor. And I think we mentioned about it on both fronts. We have not lost. So it's important that we are providing more value to our customers and they're using more, and we need to adjust that in the voice part. Coming to the other areas on the growth areas, and you specifically spoken about M-Pesa. M-Pesa was doing well. M-Pesa has always been growing double digit. I think this is probably one of the rare occasion, and if you take out the COVID time when the P2P was, those transactions was made free, have been growing double digit. And we actually started pretty well this year and growing as per expectation at the double digit, but we saw a big dip. Pre-election, during election, and after election. I'm sure you would have noticed that the business activities came down significantly. Yeah, and we are not immune to that. Remember, we support a large number of customers doing what they do on their day-to-day basis in M-Pesa. So that's what we have seen a second quarter drop. But I think the underlying health of M-Pesa ecosystem is very, very strong. If you see the volumes growing 32%, values growing 32%, if you see the number of transactions per customer per month, that's growing 16%, which means that customers are using more. They're finding more and more use cases for them to use M-Pesa. So I'm not at all worried about the health of the business. we need to get through this to be able to see that the Safaricom remains a growth company, and all other areas where we are focusing on the growth, I think it's showing up. And this is a phenomenon that I think all of us have to go through this.
Allow me to walk you back to voice. I'll come to M-Pesa a little later. So you mentioned that the focus with voice should be on slowing down the decline. How do you intend to do this, considering the price sensitivity we are having, especially in light of the macroeconomic environment?
I think what you have learned, if you have a proposition which allows customers to use it, whether it's a time-based proposition, whether it is occasion-based proposition, there is always a stimulation that we get to see. And we have seen that, as I was saying, while voice revenue hasn't grown, usage has grown, which means that there is a propensity for customers to use more. So if that hasn't gone away, there is still a case for voice. Let's just accept it. Yeah. Then how we are doing it? We are doing it through, we have refreshed our customer value management proposition engine. We have invested a lot, and we are powering big data to enable customers, knowing customers pretty well, to know that what exactly they need and providing the services. So coming to a point wherein it's almost like segment of one, that we know exactly who you are, we know exactly what you would like to use it for, we know exactly the occasion actually use it more, we know exactly what time you use it more. So allowing our big data capability and then our CVM, or the customer value management proposition engine, to offer those to you, and we have seen a great traction on that. So it's not like not everything for everybody. Yeah. So you're segmenting customers based on the customer demand, customer profile, and then offering those. I think that helps a lot, and I think that we continue to do well. And we just started this last year, and we see a good result already on this front.
There was quite a bit of mention during the release about the introduction of excise on SIM cards, and I found that a little curious because it took effect in July, effectively the latter half of the half we have been discussing the earnings release. Just how much of a dent did this occasion in the numbers?
Yeah, that's a very good question, and this came in another session as well. What I said is there are few elements which is combined overall impact on the performance: SIM price increase, device price increase, and the whole inflationary pressure on the consumer wallet. Yeah. So what we have seen is okay, and also remember that this is the period also where we have accelerate our KYC, the sub-registration, the Communication Authority of, initiative of sub-registration, right? So we have seen less number of gross addition that's coming through during this period. So it's a combination of, you could argue that that's also coming because customers are kind of optimizing, saying that I don't want to buy a SIM now, or they're saying, oh, cost of SIM is high, I don't have money, and I'm also now under this whole sub-registration, there is an effort that I have to make. So what I mentioned, that it's a combination of all of these things has come through. So there is not a specific impact that I can provide you for just what happened because of SIM price increase, but it did, and it did actually. The other one also, the big one, is the handset price increase. I think that will have a long-term impact on how you are really building the digital ecosystem here, because that has been our really major focus. As you know, the 4G devices, we have 97% coverage across the country. We are fully covered, but we need devices in the hands of the customers to enable them to enjoy the digital ecosystem, right? And that's what our view, that it will slow down because it becomes more expensive, and that's what we are saying. I think that's something should be looked at, relooked, and probably some of the capabilities should be built within the country, because this is the one which you import from outside, which is also causing. So all together, I think it's an impact coming through. So it's not just one item on the SIM price hike.
The handset pricing notwithstanding, I think I saw 1.2 million devices, 4G enabled, onboarded onto the system.
24% growth. And but by the way, you could be excited about that 1.2 million, but our target, what we are trying to do is much more. we are growing, I think we're doing 33% before, so almost we are adding 1/3 of additional 4G devices in our ecosystem. This half we added 24%, so we are not happy with this. I think if you talk to Peter, he will also mention, he will say that we want to double. We want to make sure that everybody has that affordable handsets they can use in a way they can enjoy the digital ecosystems which exist. I think that's what we are pushing for.
The development around the mobile termination rates, how has it reflected in these numbers?
In the financials? Yes. Yeah. So, as you know, this has come into effect from 1st of August. So, in the first half, with just first 2 months of impact. In the top line, it is about 470 million for the first half, but the full year, 8 months impact could be around 2 billion. And we are talking about a 3 billion dent in our top line on an annualized basis. So this is not a small or this is not a trivial item, and that's why we are saying even our growth deceleration was to some extent because of mobile termination rate. So 4.6% top line growth adjusted to 2 months of MTR, actually it's 5%. So it is significant.
Would you say that's regulatory overreach?
I won't say that. I think it is globally mobile termination rate is something that always on a decline. What we are saying is, if you recall the olden days, what used to happen is who used to pay for the customer used to pay for the incoming call, right? There was no interconnect. Now the interconnect come in, say that okay, customers will not pay for it, operators will share the cost. That's how the termination rate came in. So termination rate is not an item of profit. It is actually to recover your cost. I think sometimes this is not understood well, and therefore mobile termination rate should go down. Of course it should go down because cost of delivering is going down. It should go with that pace. What happens is that if it is not with that pace, you would be incurring cost. You don't see that, but you would be losing an income which was offsetting that cost, and that will dent your margin. And that's why we have been saying that process is important. How do you arrive at the cost is important, and also a glide path where it allows that the cost recovery to happen in a way the margin is not diluted because you'll be incurring cost but you're not recovering. I think sometimes this is not understood well. The other thing is that if you're not managing it well, this will lead to lack of investment. We are just talking about 5G. You have seen that we launched commercially, and we're talking about 200 sites by the end of this year. None of this will happen, unless we really manage to ensure that we are generating capacity in order to invest for those future growth opportunities, and also the technology shift which allows customers to use those services which doesn't exist today. And that sometimes is not understood well.
Safaricom has revised its guidance as well on Ethiopia, and I'd like you to give us a little more flavor into that. I'd imagine you have seen some softening of the risk environment there with the peace deal, etc.
So peace deal has happened just now. So I think the impact of that and how this whole overall environment will play out, we'll have to wait and watch, right? But you can imagine the things that there's a lot of concern around not having a peace deal or having a war will go away. Yeah, it's a question of time, and that's a very important point. Also, I think some of the countries who are staying away from investing, or even especially and also the financial sectors, availability of World Bank funding, the IMF, and all of this, I think that probably will also play a positive role. That's what our anticipation and hope that comes out. I think it's a very positive thing, and this also allows us the more certainty around you're putting in investment, you're going to the places where you know that there will not be disruption, because we are now we just have 16 cities, but we're going to cover the entire country at some point in time. So I think it's a very positive, but the guidance revision is more out of what we see on the ground. We did see the number of sites rollout that originally planned didn't come through. There's a bit of slowdown from sites that we were supposed to get from Ethiotel. As you know, we were finalizing the agreement with Ethiotel. That took a while, but that's now available. So there's a bit of slowdown on the cost, and there was also some cost savings that came through. But I don't think that's changing the overall business case in any way for the long term that we have confirmed. That remains same.
I'm curious, and I've asked Safaricom this question before, and allow me to ask you, and this is from previous experience in transaction advisory in Ethiopia. How are you navigating the FX environment there?
Yeah, that's a good question, and that's a very common questions that we have to deal with. And so remember, when we went for the bid, we knew about this. It's not that this has come up suddenly. So the currency risk, one of the three key risks that we evaluate, actually four risks that we evaluated. Currency risk is one of that. The way we are navigating it currently is there is not a lot of local currency that we need to convert into hard currency because we just started commercial operation. Second is majority of our payments are happening outside Ethiopia, and the funding, you didn't ask me, but I'm just saying the funding has now so far, majority of the funding has been through equity funding, and equity funding has been through hard currency, right? And what you're doing is the Ethiopia has a policy which they call is Franco Valuta, wherein they allow foreign payments to go from an offshore fund. So when you take permission, we are able to do that. So to the extent we need to make those foreign currency, most of those are actually made offshore account that we have, so that we are managing that pretty well. So there has not been really a requirement of currency that we need to take out or convert that, which is what I think the problems most of the entities are facing, and we will face in future. So the question that you asked, how are you navigating? It's not a problem for now because it's still a lot of funding coming through from the shareholders, and we are managing that. I think the other part that we are managing well is for the local payments. We are avoiding conversion to local currency. We have line of credit in local currency, which allows us to make payments local currency from the local funding itself. So it's not a current problem. Maybe this is something that we have to watch out for future. And we are hopeful that as part of the liberalization that government of Ethiopia has embarked on, this is also something that this will be coming at a point in time where by that time probably by the time it comes in, probably this problem would have solved. Our problem comes in at a later point in time than today, what you're facing in currency.
Dilip, you did mention as well that Safaricom is engaging the International Finance Corporation for both equity and debt. And then you followed on to say that Safaricom still intends to maintain a significant stake post-transactions. I'm curious, knowing the kind of stakes that IFC typically goes for, is that a guidance that we are most likely going for debt from the IFC?
Very good question. And let me try and unpack this for you. So what IFC has said in their public disclosure, they are in discussion with us for an equity stake which allows them to invest up to $157 million. Yeah, certain equity stake. And then they are also saying that they are in discussion to give from their own side about $100 million of debt. Yeah? So that's what is the headline. Now, within that, what we are saying, yes, they will come in, and this investment, $157 million equity, is not day one. So it will come over a period of time, which means that what we have confirmed through our subsequent communication, saying that we will always keep a majority stake, because there was this consideration whether are we going to come below 50%? No, we are not going to come below 51%. Yeah. So this investment is going to come in over the investment period. Yeah, and then they will come at a certain stake, which still allows us to keep the majority stake. So debt is separate. The equity comes in the entity which invests in the operating entity, and debt is coming right into the operating entity. Yeah, and these two are separate. And debt, it's IFC's own investment, what they are talking about, and then we can also bring in other partners coming through that hole, depending on our requirement, further funding requirement in Ethiopia. That's how I wanted to confirm.
Good clarity there. So Safaricom, in your assessment, is on course for meeting all its Year 1 licensing conditions in Ethiopia?
So what we said, we do have coverage obligation, and a critical date is Q1 of next year, and that critical date, the coverage obligation is, I think we mentioned about, is about 25%. We we did face some delays, right, in terms of rollout because of the issues that we have faced, including some of the delays from our equipment vendor. But we have now gotten into a pace which gives us the confidence that actually we can deliver that. So we are all geared towards meeting that coverage obligation, which is due Q1 of next year.
And we saw the green lights to roll out mobile money as well. How soon is this kicking off?
So green light in the sense that yes, there is intention to issue a license, and the process is ongoing. You have seen the public announcement on that as well. But there is still a process which needs to be concluded, including an approval which requires in the parliament. Remember, even today, the foreign entities are not allowed to invest in mobile financial services as a foreign entity. So that needed to change. All preparatory groundwork has already been done. That process will enable then government to finalize. But the two parts to it: one is the getting the license, which we believe, we are very positive and very hopeful that it comes soon. The other part is then how do we then make it operational, because it's just getting a license is just one part of it. We have to technically be ready to enable that to happen for our customers. So that second part, actually, we are quite ahead in terms of preparing ourselves. So I don't want to give you a date, but I think when we have the license, it will not take a lot of time for us to launch mobile financial services in Ethiopia.
Dilip, there's been talk about Safaricom floating a fixed income instrument in this market, a bond essentially, to raise capital. Is this an option on the table?
Yes, that's an option, and I did mention it before. We have done the preliminary groundwork, and we are also in discussion with our key stakeholders from regulatory as well as from partners who could come in. The way we are framing it is we have been investing on green energy a lot, and there are other green investments which qualifies for sustainable or green bond. So we don't have a date or we don't have an approval in our hand, but what I can tell you is that this is something very much in our consideration. But of course, it's also a function of, we don't go to the bond market just because you have to go. You need to raise money. So it will be probably coinciding with the need for money, and then, but this is something in our consideration, and we are looking forward to it.
Wealth management and venturing into that space. Very interesting. It's been a discussion for a long time. I'm just curious, considering the conversation we've been having about the necessity or lack thereof of splitting the telco from the mobile money, has that been mooted as one of the predicates for venturing into the wealth management space?
So first of all, the discussion around split or separating and all of this is not new, right? This has been going on for long, and discussion around wealth management is also not new. You may have heard about this, our intention to get into this space over a long period of time, and in fact we have been testing. Of course, we didn't have the requisite approval which allows us to offer this to customers on a commercial basis, right? Now we have it. I don't think there is any link with that discussion of M-Pesa and telco with wealth management. In our portfolio of services that we expand beyond what we are doing in financial services, which is one of our key pillars, expanding financial services, wealth management, savings and wealth management was also felt to be a very strong enabler for solving customer problems. Yeah, so we want to become a purpose-led technology company. So our purpose drives everything. So we are always looking for opportunity where we can solve customer problems, and we felt that there is a need where we can actually fulfill. So we are not there to compete or do anything that they are a crowded market or as the people say, but there is not a lot of traction that's available today. I think we believe in terms of the penetration that what it is, and that so probably in terms of detailing out of you still have to wait. We are at a stage where we can say that we should be probably launching this soon. In terms of preparedness, we are very advanced. Approvals are all in place, and we are in discussion with multiple partners. Obviously, we'll start with one or two, but then we have an opportunity to expand it more than one partners. But we're very excited about this coming through. Savings and wealth management, I think, is a big element of the financial services expansion.
I see. In your alternative, your new growth areas, there is ICT, IoT, there's content data. I'm really curious about the ICT and IoT, and because we've seen the new administration very aggressive about broadband connectivity, and in many places launching free Wi-Fi. What's the interplay, and what role is Safaricom looking to play in this space?
ICT, IoT at the level that we are operating now and the size of opportunity that we believe exists is huge. We are not there. So that's why you see that it's on a small base, the 50-60% growth on a revenue line, pretty exciting, but it's still very small. Yeah. The opportunity going beyond connectivity, just providing a SIM card with connectivity or a fiber line, just a pipe, there is so much more that comes on top of that. There's IoT or an ICT solution, security, fraud management, and other solutions that comes in. So I think from an enterprise point of view, this is a significant growth area, and that we have been focusing a lot on this. I do believe that some of the government initiatives actually kind of complements what we are doing, or probably even enhances the ecosystem for customers to have more access to the services that can come in future. So I think I don't see that as a competition, or I don't see that as I consider that more as we come as an enabler and solving those problems, rather than considering that some of those are going away. No, I don't think so. The pie is really big, and I think the way the government agenda in driving some of these areas, we believe this opportunity is huge, and we are actually driving it very hard. We started working on this a couple of years back, and that's why you start seeing, we now started reporting numbers. We are not reporting these numbers before. Now you start seeing numbers showing in our graph as well on ICT, IoT, and content. These are our growth avenues beyond what you're doing.
Dilip, I really have to close this. I know I'm keeping you way beyond our agreed time. As I was coming to this side, I checked the markets. The Safaricom share price is down 33% year to date. When you look at that, do you feel the market is overreacting? Do you feel it is reacting as expected, considering the sort of fundamentals you have in the company?
I mean, this question you can ask many, the people who analyzes and who looks at our numbers and then how they feel it. From a management point of view, I think the way we see it, we are executing on our strategy. We do believe that Ethiopia becomes one important element in our conversation going forward, and as you have seen that we have now started seeing these things coming to fruition even in Ethiopia. The share price has many elements. One of the things that you have to consider, during good time, we also get benefited because we are considered or benchmarked with some of the other companies which are in fintech. Yeah, but we are profit-making fintech company, and globally we would have seen a significant decline in fintech shares, technology shares within that fintech shares. So if you look at our M-Pesa weight in our overall share price, I would imagine, I'm sure you would also know that it will be higher, right? So when fintech takes a dip, of course, we share Safaricom also takes a dip. That's the one aspect of it. It's more of a global phenomenon. You see fintech valuations going down. Tech companies' share prices are also going down. So we are also impacted. But other than that, also, I think, I'm sure you follow the flight to safety. Yeah, that's a big thing. That's a big element. And all the emerging markets are facing this, emerging and frontier market are facing this big issues around money going into those markets. We can't avoid that. We are the most liquid share. So when there is a rebalance happening, it's much more faster to that happen. Yeah, but I think these are some of the things that I think we need to deal with. And from a management point of view, I think what we are focusing on, do the right thing, execute on strategy. Share price will reflect end of the day what the shareholders believe what is worth for.